Hi, my name is John Palmer, Senior Vice President and Head of Real Estate Strategies at Westwood. I wanted to take a couple minutes to introduce to you an income strategy that I manage called the Westwood Real Estate Income Fund. This innovative fund is designed to provide investors with robust current income and attractive total returns by fulfilling a dual mandate. First, this strategy is focused on the real estate sector, whereby we invest the vast majority of the fund's assets in publicly traded REITs and other real estate related companies. Next, generation of current income is the second key strategy mandate. And to achieve this, we have historically invested the bulk of the strategy's assets in senior securities with a significant emphasis on preferred shares issued by publicly traded REITs. We believe that this niche marketplace provides investors with an attractive value proposition, as these securities can provide robust yields, strong credit metrics, and the prospect of capital appreciation when purchased at a discount. Given that these REIT preferred securities are generally not top of mind for most investors, let's take a closer look at this marketplace and how we approach this segment of the market for our investors. Most REIT preferred securities have a basic structure. These securities tend to be offered at $25 par, have fixed for life coupons, meaning that they do not float with a reference rate, and have dividends that are cumulative. While these securities are perpetual in nature, the issuer generally has the right to call the securities at par plus any accrued dividends 5 years after issuance. Now, it's important to distinguish these securities from the much more commonplace preferred securities issued by banks and insurance companies, what we refer to as financial preferreds. Those preferred securities are generally issued at $1,000 par, have fixed to floating coupons, and most pay coupons that are non-cumulative. From our perspective, REIT preferreds offer investors more yield, better structure and credit, and less levered balance sheets by the underlying issuer. In the typical cap stack structure of a REIT that has issued preferred securities, there is usually a significant amount of common equity that sits junior to our preferred security, indicating that there is a substantial amount of capital insulating our position. This is very different from most of the traditional financial preferred issuers, which generally have much less common equity funding their balance sheets. Next, we believe a robust dividend yield remains available for REIT preferred investors. Historically, there has typically been a 75 to 150 basis point yield differential when you compare REIT preferred securities to financial preferreds, and that relationship is at the wider end today. Importantly, our strategy has also acted as a portfolio diversifier for our investors. Our strategy has virtually no correlation with the 10-year Treasury over the past 10 years. As of June 30th, 2025, 72% of the fund's assets were in preferred securities and 28% were in common stock. Again, as stated at the beginning of this video, our cross-capital stack approach provides us with the flexibility to both mine the REIT preferred universe for attractive yield investments, satisfying our income mandate, while also allowing us to go down the cap stack into the common stocks, where opportunities for greater price appreciation can exist. Our security type allocations move over time. It goes without saying that we actively manage this fund and do not use a static capital allocation model. Lastly, we have a tried and true process for portfolio construction. We underwrite every investment in the fund utilizing a methodology that emphasizes traditional credit metrics, an analysis of the specific structure of each security, as well as scrutiny of the relative and absolute value associated with current market pricing. In summary, we believe that our focus on both real estate and senior securities is an innovative approach for investors looking to diversify their income allocations, and we are extraordinarily proud of the Westwood Real Estate Income Fund's nearly 25-year track record. Should you have any additional questions, please reach out to Westwood directly, and we'll be happy to continue the dialogue. With that, we thank you for your time.